Welcome back everyone, and today we're looking at AMD. They reported their earnings after the market closed yesterday, and upon the open we can see quite a lot of red right across the board, but one of the worst performing companies today is Advanced Micro Devices. Now it's down around 7%, in fact has gone as much as 9%, so will depend at which point you're watching the episode today. But we also want to make it clear, year to date, with many companies performing very strongly, AMD still sits in that bracket. In fact, it's up 35% year to date, making it a better performer than NVIDIA, which is up 33%. But we want to understand what is going on with the company and why is it suddenly down after their earnings. Now we can see that they actually came in line on the earnings per share, although some analysts do disagree, which we'll get onto, and there was a revenue beat. And for those that don't know, earnings per share down 30% from the same quarter last year, down 50% from the previous quarter, and whilst it is in a cyclical industry, these aren't perhaps numbers you want to see, and there is a very good reason why we have seen a bit of a dip, and that will become clear when we take a look at their investor presentation. We want to really highlight where some of the potential issues lie, and in fact whether or not this is a good opportunity to consider adding more if you're a shareholder, or in fact if you're someone that is looking for an attractive opportunity in the semiconductor space. As we can see, down around 8% today so far. It's up 29% over the last year. Year to date, as we highlighted, very strong, outperforming the S&P, outperforming NVIDIA, and over the last 10 years, it has massively outperformed the S&P, up more than 9,000%. Now let's be honest, this company is still sitting in the upper end of the 52-week range, 52-week high, $183, and it actually doesn't feel like that long ago where we were analyzing this company when it was sitting below $100. But we see here, Seeking Alpha and Wall Street still believe this company is a buy, and the forward valuation looking a lot different than a few months ago, sitting at 44. So let's see what is going on and what is the valuation coming to today. Firstly, we can see investors were not happy with their data center results, something that is coming incredibly under the spotlight as it is one of their main key growth drivers. And actually, some analysts were expecting slightly higher on the EPS and are not satisfied even though revenue is above what market was expecting. And if we actually get into those headlines, because ultimately any sort of deviation from forecast will in fact change the market, we can see, yes, they reported 48, but some analysts wanted a little bit higher at 49. And whilst that isn't good to see, actually expectations for next quarter is very positive. They're anticipating 8.7 billion. Granted, they say plus or minus 300 million. Analyst forecast sits lower at 8.3. So yes, if we look at it from this perspective, a very small EPS miss. Revenue was a beat, and they're actually expecting in this upcoming quarter a fairly larger number than Wall Street's expectations. And we can even see here different analysts actually have different expectations. When we look at the Wall Street Journal, we can see they actually believe AMD did very strong, both from an EPS and a revenue perspective. But what will give us a better idea is when we actually uncover the makeup of their earnings. Revenue itself was up 32% from the same quarter last year. We see data center, that is a bit of a slowdown, up 14% year on year, and that is probably why we are seeing a bit of a hit to their numbers. We also don't like the fact we're seeing deficiencies in their gross profit. Margin is down 9 percentage points year on year, and we actually see they've reported an operating loss of 100 million. So in terms of their own investor presentation, we can see top line revenue up, very nice, up 32% on a year on year comparative, but we're seeing their margins drop. Remember, that is not something we want to see. We wouldn't call this a high quality company. Criteria is A, revenue increase, B, margin improvement, and we're seeing the opposite to their margin. However, we have to stipulate the reason for this is, as they say, 800 million inventory and related charges associated with the US export control restrictions on some of their products. Now, we cover this at quite some detail, and it doesn't just affect AMD, so we would expect this to crop up when we have a look at NVIDIA, who are reporting shortly. but that's also something that has affected their margin, where they say it would have been 54% if not for this issue, which would have been an increase from 49%. It's also something that has affected pretty much right across all of their numbers. Instead of an operating income like we saw last year, they reported, as we mentioned, a 100 million loss, and ultimately US export control restrictions has really hurt them for this quarter at a bare minimum. But we can see EPS is up on a GAAP basis, down on a non-GAAP when you do incorporate that 800 million inventory charge. Now, data center, as we said, is always something that will come under the spotlight, not just for AMD, but also NVIDIA. Now, it's up 14% year on year. Analysts not only wanted to see a higher figure, but as we can see, due to those charges, they've reported a negative margin, -5, and actually an operating loss of 155 million. Same quarter last year, positive 743 million. Also highlights any kind of news that we get about semiconductors that ultimately will affect AMD can really hurt this company's numbers, something to be expected if we hear something new from Donald Trump. And as we said earlier, expectation is 8.7 billion on their top line for Q3, which was a few hundred million higher than what analysts were forecasting. But you can really see here the disparity between AMD and NVIDIA. Whilst we get a decrease just in this quarter, in fact, if you go back to the previous quarter, the trend is in fact downwards. We can see NVIDIA has been the complete opposite, where it has been climbing on a very continuous and rapid movement. In fact, NVIDIA from 2020 have been increasing data centers 96% year on year. AMD very strong, but in no way near a comparison at 48, especially given the slowdown we have seen in the previous 2 quarters. Now, it hasn't phased analysts that much. We can see many of their expectations are still talking about this company as being a buy. We have today UBS reiterating their status, believing this is intrinsically worth $210, and we have another analyst maintaining AMD at $200. So ultimately, analysts still for the large part fairly bullish, but we have to be honest now, valuation is definitely something that will come under question. If you remember, not that long ago, we were talking about this company trading at a discount to the sector. Right now, given their forward valuation of 44, it means you are paying a 90% premium to the overall sector. Not only that, as of today, you're also paying an 11% premium to their own 5-year average, something that for the large part is very consistent. No matter what valuation metric you look at, AMD trading at a premium to both sector and 5-year average. Now, the institutions, they hold 71% ownership, where they've been selling 20 billion in the last year. They've bought a little bit more in the same time frame at 22 billion, but the real driver we have seen is this latest quarter, where they've bought a lot more than they have sold, 2.55 billion versus 864 million selling, something we've also seen in Q1. So overall, for the large part, institutions are net buyers for AMD. And if we do a quick look at insiders, whilst they hold a very low ownership, 0.06%, we did get some insider buying at $500,000, but in the same time frame, a lot more selling at 33 million. And you can see in Q3, we get selling 2.8 million, Q2 more selling, and in Q1 was where we noted the buys. Now, full transparency will show you the insider buying, the insider selling, but ultimately we do see insider selling, not particularly a bearish signal. They sell for many reasons, personal and financial. 15th of July, we had the EVP sell 18,000 shares, netting them $2.8 million. Information is here if you want to incorporate it in your own analysis. Then looking at super investors, whilst we are still waiting for the release of all 13Fs, 3 of them hold AMD in their portfolio, and actually we had a new buy from the Hillman Value Fund. It was a new position in this latest quarter in their portfolio, adding 21,000 shares, being around 3% of their overall portfolio composition. And this is still a company that is growing at an attractive rate. They get an A on the growth grade, 22% year on year, 20% expected this year, well above the sector at the 6 to 7%. Yet worth highlighting that this is a company that is growing slower than the historical values. And one thing that looks very impressive is earnings per share. They're expecting over the next 3 to 5 years to grow at 31%, much higher than the sector at 14, so you could argue they do deserve a premium to the sector, but a little bit lower than in fact their historical at 33%. Bear in mind though, they are now trading at a bit of a premium to what they were in the last 5 years. And with the profitability at an A-, we can see gross margin strong, 54%, well above both sector and their 5-year at 50%. Bottom line, 8%. Not the greatest. Yes, it is above the sector at 4, but we can see over the last 5 years it was higher at 11.5, and this latest quarter reporting a loss, not something you want to see as an investor, but we do understand the reasons why. They're also generating a bit more cash from operations, 3.5 billion, than over the last 5 years at 2.5, and significantly above the sector at 117 million. Now, they did just report Q2 where they were already expecting a drop to the EPS, and over the next 3 quarters they are projecting double-digit growth. And what this means is when we look to the next full accounting period of December 2026, based on those numbers, they're trading at a forward P below 30, maybe more enticing if you do believe they will, at a bare minimum, really hit those numbers. And then if we look at the comparative against the S&P and the QQQ, in fact, AMD up 29%, S&P lower at 21%, and QQQ not that far off, we're talking pretty much in the same percentage. But if we just zoom out even further to the last 5 years, we can see AMD 90%, pretty much in line with the S&P, slight underperformance to the QQQ at 111%. And if we go back even further to the last 10 years, there is absolutely no comparison. They're up more than 9,000%, S&P up 200, QQ up 448. But very important, we do like to always say this, but you need to understand that past performance is never an indicator of how they'll perform in the future. And if we just compare their performance against others in the sector, like Texas Instruments, like Qualcomm, always good just to understand whether we're seeing issues or in fact positives with a company in isolation or industry-wide. But we can see over the last year, AMD is up, pretty much one of the best performing when we look, although others equally as strong. We've got Micron Technology also fairly well. Over the last 5 years though, it's actually sitting towards the lower end, although some people may be satisfied with an 84% premium. We've got Micron Tech, again fairly attractive, up 126. And then when we zoom out to the last 10 years, we can see they're up very strongly. No one comes anywhere near. So for the large part, this industry has been very strong, unlike some other industries, for example big pharma that we reviewed earlier today. And if you just want to see the underlying metrics which will help us to understand the cyclicality of the industry and how it affects AMD, free cash flow, we want consistent growth over the longer term, not something we get but projected to rise very rapidly over the next year. Sales growth, again, you could argue a bit of cyclicality, but more often than not, we're seeing double-digit growth, 2024, 14%, trailing 12-month, 22%, and they're expecting 2025 to be another double-digit year. Shares outstanding, worth flagging, they do dilute your position as a shareholder, and we can see that. The only thing we would say, maybe not a massive worry if they can continue to perform very strongly, and in fact, ultimately outperform the market. ROIC, probably one area we don't particularly like. 10% is what we want to see, bare minimum, to give us faith management are able to effectively allocate their capital. Low single digit in the last few years, 4% on a trailing 12-month. And again, cyclicality showing through their margins, no consistency here, and free cash flow, whilst a little bit better, again, inconsistency is one area we would consider when we take a look, in fact, at our margin of safety. Net debt to EBITDA, though, very positive from 2019 to 2024 and projected over the next year. These are the number of years, or lack of, that it will take the company to pay off all of their debt net of cash on hand. Correlates to balance sheet strength, really highlighting for AMD, it won't even take them one day to pay off all of their debt. Now, before we get into the valuation, a quick look at the income statement and balance sheet. Yes, revenue has been growing rapidly over the last 10 years. 4 billion 2015, now sitting at 26 billion, trailing 12 month at 28, highlights there will be growth into 2025 for the year-end report. But as always, we want to understand, does the bottom line net income follow suit? Do we see a fairly similar trend, revenue increase, net income increase? And the answer is a complete no. Cyclicality again, some years positive, some years negative. Reported 660 million loss in 2015, 1.6 billion profit in 2024. But you can just see on a year-on-year basis, it is very inconsistent. Something to factor in, but nice to see. Trailing 12-month 2025 should be a fairly strong year. The other thing is a quick health check. Total cash versus total debt. Cash and short-term investments just under 800 million 10 years ago, now sitting at 7.3 billion. And the reason we look at this is a quick health check to compare against their total debt numerically and directionally, because any other number, or in fact numbers here in isolation, don't give anything away. And their debt, for the large part, again very inconsistent, but has increased from 2.2 billion to now at 4.7. Main thing is cash balance is far superior, and as we said, won't even take them one day to pay it all off. Now, before we jump into our valuation, just to let you know, we have released our latest free weekly article. We drop one every single Monday morning to your inbox, covering severely undervalued stocks, as well as what's gone in the market over the last few days. So click below, you can sign up and read straight away, where you'll be able to grab a copy of severely undervalued stocks for the month of August. Lots of information for each one, the upside that Wall Street themselves see over the next year, and on top of that, you can grab a spreadsheet of stocks that Wall Street themselves believe have the most upside in the S&P right now. So click below, you can sign up and read straight away. We then move into our updated intrinsic value based on this latest quarter, coming to $162. Now you can see we have the free cash flow year on year, and for a starting point for 2025, we have extrapolated this quarter's free cash flow. Now bear in mind, we've gone 20% moving forwards in line with analyst expectations, but we have low, medium and high, 15, 20, 25. As always, numbers are subjective. You can grab a copy of this model by clicking on the pinned comment below, running through your own numbers, whether it's for AMD or any others, but based on 20% and the discount rate, we get the present value of future free cash flow and terminal price, add together with the cash, subtract total debt, get to the equity value, divide by the shares outstanding, and we get to 16220, which indicates only 1% upside. Worth highlighting as well that baked into the value right now today, if you're buying the company, is 19.9% growth to the future free cash flow. If you believe it should be higher, then it looks undervalued. If you believe it should be lower, then overvalued. Transparency at 15%, $120, downside of 25%, and at 25%, $218, we're talking upside of 36. So using the middle rate, as we typically do on the channel at 20%, we're not done there because we always like to apply a margin of safety. 10%, execute on that if it meets our 3 golden criteria: wide moat, strong financial metrics, good forward-looking data. If you believe that, a buy at $146, but this really flags right now after the earnings dip, we sit around its fair price. Consistency though, if you like 10%, a buy at $146, at 20%, a buy at $130, and at 25%, a buy at $122. Wall Street themselves, yes, we have some analysts with price targets $200 and above, but on average, see this at $157 into 2026. That translates to downside of 2%. Give us your thoughts on AMD after their earnings. As we said, we believe this right now, trading around its fair price. Do you believe it's a buy, hold, or avoid? And what we can also do for those that are a lot more bullish and see 25% as the growth rate moving forwards, we'll also flag what the MOS will be. Clearly, it will be higher as we're seeing larger growth expectations. Not at 30% just yet. We see this around the 25% mark. As we said though, give us your thoughts. AMD, advanced money destroyer, advanced millionaire distributor, whatever you see, buy, hold, or avoid. Don't forget as always to sign up to the free weekly newsletter, grab those spreadsheets, come and join us at Patreon where we cover our buys and sells. And as always, have a great day. We'll see you all on the next one.